7 financial lessons you need to be aware of. For many of us, school involved too many quadratic equations and not enough about personal finance. Here are the money lessons they should have taught us instead. 1. How to make money last. If you're having trouble making ends meet, it effectively boils down to earning more or spending less. That's the first step when it comes to learning about finances. However tempting it is to go on a massive shopping spree as soon as your student loan or wages drop, it's crucial that you work out your disposable income first. Paying the rent and setting aside cash for bills doesn't take long. Once that's sorted, you'll have a much clearer idea of what's available to spend. 2. How to haggle. There's no shame in haggling to get the best deal when you're buying something. What better way to convince a seller to lower their price than the fact you're living off a student loan? But, unless you've got years of experience as a market trader, you probably weren't taught how to barter in school. Thankfully, we've got a really useful guide to haggling like a pro. Get practicing. 3. The real dangers of debt. For most students, going to university would be impossible without debt from tuition fees and maintenance loans. Despite some of the scare stories, student loan repayments are actually achievable and always in line with how much you're earning. However, some other types of debt can be quite dangerous. 4. How to improve your credit score. When you apply for most financial products, things like credit cards and bank overdrafts, where you essentially purchase money, lenders will run a credit check on you to calculate their risk. Credit checks are done based on reports of your borrowing history, managed by a small number of credit referencing agencies. 5. How interest rates work. Interest rates for the whole of the UK are set by the Bank of England and commercial banks, with the former setting the base rate, and the latter adding more depending on the service offered and how generous they're feeling. Interest rates in the UK were at an all-time low due to the financial impact of the coronavirus pandemic. However, they have recently been increasing rapidly. Increasing the base rate makes it harder on borrowers. Mortgage rates will go up, for example, but is great for savers.